All right, Alex, you want to go here and get started?
Sure, we can go ahead and kick this thing off.
Great. Well, first off, I wanted to thank everybody. My name is Saxon Bauman. I'm the Director of Investor Relations here at Florida Funders. We're so excited and thrilled to have one of our most exciting partners and one of our longest partners here, Advanta IRA. We have Alex Perney, who's a great friend of mine. We've worked together for years now, who's going to talk today about Advanta IRA, and how you can use your different types of retirement accounts to invest in alternative assets. So what we'll do is Alex will go through a presentation, and then we'll have time for questions. If you just want to type the questions in the question function, we can go ahead and get that answered. So without any further ado, my friend, I'll turn it over to you.
All right, thank you very much, Saxon, and I really appreciate everyone being on with us today. I'm just trying to get my screen share to work. Let's see. It's not giving me the permissions to share my screen on this.
Give me a second here. All right, you should be good now, Alex.
All right.
So there should be a screen share button. Yep.
Just likes to think about it for a second. All right, there we go. Okay, so what we're going to be covering today is going to really focus on the ability of you to use retirement accounts to invest into alternative assets. Now, obviously, people here that are familiar with Florida Funders, or you are coming to us through our partnership with Florida Funders, are interested in primarily in private equity type investments. So investments into companies or funds that are not publicly traded, that are not on an equities market. You're looking for that edge in your investing portfolio. And one thing that it definitely offered by utilizing IRAs is that most of your larger custodians and banks aren't willing to hold these types of assets within those types of accounts. But what we offer here at Advanta is a platform where you can use your retirement funds, whether those are IRAs, 401ks, and we'll get into all the different types of accounts that you can use in order to invest into different deals that you might find through Florida Funders, whether it's their seed fund or one of their actual companies like Stylist. We'll go through a case study with them as well. So just understand what we're talking about today is centered on being able to use specifically your retirement accounts without having to pay taxes, keeping it under those awesome tax shelters while still investing into startup companies. A little bit about myself. I'm a development specialist here at Advanta. I've been with Advanta since 2012. I've started my career doing this with kind of just working in accounting, and then I spent about 4.5 years doing actual investments for clients. I went through about 1,300 different deals for clients, whether that was private equity, real estate. I have a lot of kind of background in actually looking at these deals, reading private placements, and going through a lot of that technical detail. So if you have any questions on how this stuff from a very fundamental standpoint works within an IRA, feel free to fire that into the chat. I am, let me just get this screen to look a little different. Okay, here we go. Yeah, so just feel free to type anything that you'd like to into the chat, and I will certainly address those questions specifically as all the audio is muted. So now a little bit more about Advanta. So essentially, as I'd indicated, we are not a bank. We are not an investment provider. We are strictly an administrator and custodian of alternative assets, meaning things that are not traded on a public market, that are not going to be traded or sold on things like NASDAQ and the New York Stock Exchange. And that's why we partner very well with someone like Florida Funders. Currently, we're really proud of this. We just crossed over the $1 billion threshold mark for our assets under administration last year. And it looks like this year we'll be crossing from a $1.3 billion valuation of our clients' assets under management to about the 1.6 range in the next year. So it's a metric that we're really proud of. And with any Advanta account, we also offer personalized concierge service. So if you'd like to invest in one of the deals that Florida Funders has, you don't just kind of get thrown to the wolves of figuring out how to do self-direction. We assign you a dedicated representative that is with you from start to finish throughout the entire process on our side. Obviously, you have the great service that Florida Funders provides as well. With any questions that you have, the great integrations of their platform, and we have full integration with their portfolio as well. So it's as easy as just logging onto your Florida Funders platform. You can go through all of our documentation and everything else to do your investments. And if you do have a question, you can always give a real life person a call, and you always have the same person to go to, no matter what your questions are with your retirement accounts. And again, just to kind of wrap it up, we're a plan administrator serving clients nationwide. There isn't any type of restriction that we have on working with clients anywhere in the U.S., whether that is the lower 48 or the places like Alaska and Hawaii, so long as there's an internet connection, or even clients internationally. I have clients in Central and South America all the way over to Singapore and Japan. So so long as you have a retirement account that you're looking to use, it does not necessarily matter where you are currently located. We can work with clients nationally and internationally. And before we actually get into the nuts and bolts of what we do in examining case studies and the like, one of the interesting things about us is that we do not provide investment advice, nor do we endorse any products. All the information that we're going to provide today, at least, is for educational purposes only, and all parties are encouraged to consult with their attorneys, accountants, and financial advisors before entering into any type of investment. Now, typically, I don't preface a disclaimer with anything that is interesting, but the good thing about the fact that we are not an advisory firm is that we maintain a zero conflict of interest with any investment that you're looking to do. We don't have a position in any company that our clients invest in. We are strictly just a third-party administrator and custodian of these assets, since we don't sell or endorse any products. We could have clients investing in two completely competing companies, and it wouldn't cause us any conflict to tell a client no, that they cannot pursue an investment due to another investment of a client that a client is currently pursuing. So it's kind of an interesting way that we work in the market. Whereas some people might see it as a disadvantage that from a business standpoint that we don't sell investments, that we're not an advisory firm. It really works to the client's best interest that we don't offer those services, because it allows us to offer a much broader scope of what clients are allowed to invest in. So some of the big key points that I'd like you to take away from today are the tax benefits of IRA and 401k investments with Florida Funders. It is inherently easy to overlook just how powerful it is to utilize a tax qualified account with these types of investments, especially when you come to looking at returns, which can be multiples of your basis in the actual investment. When you have the ability to defer or completely eliminate any of those taxes, it is a very, very big advantage to being able to use these types of funds. It also gives you a big additional source of capital. Most people aren't aware that when you have retirement accounts, whether those be IRAs, 401ks, Roth IRAs, because you don't realize that they can be used in private company investing, people just kind of write it off as not part of their capital allocation that they're using for these types of investments. Now, with our service, you can bring that back into the fold. And whereas if you maybe didn't want to have as much of your money deployed in a certain scenario, now that you can utilize your IRAs and 401ks, it might open up additional investment opportunities depending on your strategy to go forward with these types of accounts. And then the last one, even though this might be new to some people or people aren't aware that you can necessarily utilize retirement plans for this, is just how easy it actually is. The barrier to entry to this mainly is the educational part of it. It is realizing that you can do it, but the actual nuts and bolts and actually doing it are not that difficult. And we try to demystify it. We try to bring it down to a level where even if you aren't familiar with the actual technical aspects of some of these accounts and the accounting that goes behind them, that it's just as easy as opening the account and then engaging with the actual investment. We take care of all of the back office, all of the record keeping and reporting, and really streamline the process to where it's accessible to anyone that has a desire to use these types of accounts they already have in order to invest. So what is a self-directed IRA? Now, although we say that is from our perspective, these are self-directed accounts. There isn't any type of special programming that goes along with this that would make it legally or functionally different from an IRA that you might have at Fidelity or TD Ameritrade. The difference between the accounts in all earnest is just the fact that someone like TD Ameritrade, they're not set up, or maybe they have a legal restriction on being able to allow clients to invest in alternative assets, things that are harder to value or that don't have a readily identifiable market value. Because that's one of the main players in the decision of a firm to accept an investment is the ability to accurately report to the IRS valuations on an annual basis. Again, someone like TD Ameritrade just wants to pull a ticker symbol valuation from an exchange and then do those reports at the end of the year. Makes it very easy from their legal compliance to do that. They're not having to hunt down valuations or do the specialized reporting that's required. So that's where we come in. It's that we offer the same type of account, we just have a different service model that we specialize in these different types of alternatives. We've been doing it since 2004, but in reality, the ability to do this has been established since 1975. So it's nothing new, it's just that there aren't as many companies out there doing it as people like Advanta. It's just a lot more legwork, a lot more goes into it. And if you are a private investor and you are someone that's looking to invest in startup companies, you definitely understand that concept of the additional work, the additional research that goes into these types of investments. And it just kind of has created a market for us to operate in here. Now, the self-directed retirement funds just allows you to keep your qualified funds underneath of its existing tax shelter while investing in alternative assets. You're not just restricted to those publicly traded assets. We offer the custodial platform to do it. And again, a good point that I like to bring out, even though I did mention it, is since we're a non-advisory custodial firm, we have zero conflict. So it doesn't matter what any of our other clients are investing in. We don't have positions maintained with those other investments on a corporate level. So there wouldn't be any time that we would tell you no, because one person is engaged in one investment that you are not allowed from our perspective to engage in another aspect. And just a few things about why people choose to self-direct. Again, the new source of capital. Some people are getting tired of the stock market, although there has been great abilities to make a lot of money recently. I'm not going to discount that. There has been, the ability to invest in things that are a little bit farther of a play, that are maybe looking to raise more capital in these uncertain times, definitely brings the attractiveness of doing these types of investments, private investments, much clearer to the investor. And the tax benefits are really awesome from the standpoint that you do not have to worry about any personal tax reporting currently. You don't include these on your personal income tax returns. So anything that is generated or anything that is deposited to these types of accounts, whether it be from a traditional security, whether it be from a private investment, from a liquidation event, from some type of buyout, or really anything else, are always going to be tax deferred or tax free. Okay, and then why? We kind of covered this in the previous slide, but it affords you the ability to expand the types of investments that you're doing. Neither are, excuse me, you can expand your portfolio base into alternative assets while still not paying taxes. Because one of the most common things that I hear from clients is that when they talk to someone, let's say their investment advisor at Merrill Lynch or Fidelity, they are told that if you want to do this type of private investment, you have to take it as a distribution, that you cannot do this. There's going to be tax implications, going to be penalties, and a lot of different things that just inherently aren't true. So that is kind of the biggest reason that I see people coming in to use this would be for that ability to get that extra flexibility in what they're actually investing. And that's why it inherently works so well with Florida Funders platform as well. So the self-directed types of plans. Now I have a lot of things up here, and I'm going to spend a little bit of time on the slide because it's important to understand that just because you may not think that you have the right type of plan doesn't necessarily mean that you don't. There's a lot of different ways that you can use tax qualified or tax sheltered types of accounts to invest in any type of deal that might be out there, whether it's through Florida Funders, whether it's like a platform like Portfolio Select that they have. There's a lot of different ways that you can do this. Now, the two most common types that we see are going to be the tax deferred and the after-tax traditional and Roth IRAs. Now, the big benefit, obviously, to a Roth IRA is that if you front load and paying your taxes on everything, then any type of return that you make from an investment is going to be completely tax-free. So whether you have just a 30 or a 20 or 30% return over the course of a particular investment, or you hit a home run and you have a multiple like a 5-10x return on something that you've invested in, not a dime of that would be taxable in the short term or long term with regards to distributions from a Roth IRA. So those are really cool aspects to look at specifically with that account. And then also we have the ability to do Roth portions of other types of accounts that allow for much higher contribution limits. Now, the traditional IRA, most people are inherently familiar with. It's by far the most common type of account that we custodize here at Advanta. So if you have a traditional IRA and you want to take it out and use it as an additional source of capital for investing, we can absolutely do that. Now, a lot of our investors that are looking for much higher contribution limits, whether they are self-employed, maybe you are a physician or someone that has their own practice, or you get a lot of 1099 income, might look to use something like a SEP or an individual K or some type of defined benefit plan. We absolutely handle those as well. The attractiveness of the significantly higher limits of contributions for SEP and individual 401k plans being about $58,000 to $62,000 respectively. With defined benefit plans, they get up into several hundreds of thousands of dollars depending on how your actuary tables are drawn for some of those types of plans. So depending on what you do in your normal course of business, there might be abilities to change and utilize different types of accounts that we have, or just utilize a portion of those accounts as well. One of the more common things that we see, especially for individuals that are investing through Florida Funders or other types of private investors or people interested in private investments, is utilizing just a portion of a larger 401k plan. For instance, it happens a lot with physicians and family offices, is where they might have a larger 401k plan that not everyone wants to invest in private equities with. Well, they'll open up a cash balance record keeping plan with us. So we will open up a sub account to that 401k that will allow the participants that are interested in doing private investments the vehicle to do it underneath of that tax shelter. It's a really cool aspect that not a lot of people kind of gravitate towards, and it definitely is a very specific part of the market that people that utilizing these kind of things, but especially people that are engaging with Florida Funders that would really get a benefit from something like that. It's something I always like to make sure that people are aware of. And then also pension plans. Although they're not as attractive now as they were in maybe the late 80s or early 90s, we still certainly do take different types of defined pensions from small family offices or other type of small businesses that want to engage in the ability to invest in different types of private placements. So just because you don't have a self-directed IRA, just because you don't have an IRA or maybe a 401k, does not mean that you're precluded from utilizing our services and keeping your funds underneath those great tax shelters to invest into private companies. So just keep that in mind. I'm always happy to schedule a consultation to take a look at exactly what someone has and what they're looking to invest to see what exactly the best fit is. Because just because you have one type of an account, maybe you're looking to get into a different type of an account. So the best fit is typically out there, but it's always typically a little bit tailor fit, especially with these types of investments. Now, again, the types of investments that you are able to engage in is as varied as the day is long. The types of investments that our clients here at Advanta use are ranging everything from buying real estate to private equities to debt, whether that be mortgages or convertible notes, unsecured notes. I won't get too far into the weeds on that. But at least from the aspect of our partnership with Florida Funders, it kind of breaks down into about 4 different categories. One would be equity. So you're buying a straight equity position in a company. It's as easy as engaging in the Florida Funders platform. You get on your dashboard, you can see all of their offerings up there. I know Stylish just closed, but that was an equity offering. If a company is offering convertible debt, you can certainly engage with that with an IRA. Again, these are just as simple as engaging on the Florida Funders platform to actually purchase those types of investments. When it comes down to it, we will receive a copy of the PPM, the private placement purchase memorandum, the subscription documents, and then we'll make sure that your IRA is properly titled and that that asset is properly held in your IRA and, of course, funded accordingly. But you can do all of this just with a few clicks on your computer. Everything we can do through DocuSign. It's not a very paper-intensive process by any means. We have many people that do these things directly from a cell phone. It's not really as cumbersome as some might make it out to be. And then the bottom two, the portfolio select, and then also the different types of funds that are offered through Florida Funders. I'd like to let Saxon talk a little bit about that because they're really cool programs that they have. We definitely have clients that are engaged in both of those types of aspects, but he is certainly the bigger expert on those types of offerings. So Saxon, if you want to chime in a little bit on what your portfolio select program is, and then also a little bit about any particular funds that you have coming up that y'all are getting funding for. I'll let you expound on that a little bit.
Yeah, no, absolutely. And thanks, Alex. So essentially, Florida Funders offers three types of investments. There is the fund investment, there is the portfolio select investment, and then there's the individual angel network investments. So think about it like a hierarchy. The first dollars in come from the fund. The second dollars are the portfolio select VIP members. So they have a 7-day window to be able to opt in or opt out of individual deals if they want to move forward or not. And then finally, whatever the excess equity is, whatever the remaining capital we're looking for, that then goes out to the angel network, and they have the ability at that point to pick and choose the deals that they would want to do for as little as $5,000. So currently the fund investment is $500,000 minimum. It's a capital call structure with 20% due up front, and then the capital call is happening really over the next 3 years for the remainder of capital. For the VIP Portfolio Select program, it's a $50,000 minimum, and you have the ability, once again, to opt out of deals that you don't like. And then finally, on the individual angel side, it's a $5,000 minimum. With all of these investments, they could be either convertible debt and or equity. The majority of the investments that we make are equity up to this point. So that's the different options to invest in Florida Funders. If anybody's interested, I can also follow up with a one-pager on that.
Yeah, great, Sax. Thanks. I just always like to, even though we are partnered with Florida Funders, it's always a little bit easier for them to explain a little bit of their offerings. So it doesn't necessarily matter which of those platforms you're investing in, whether it's a direct angel investment of $5,000 or you're going into something like a fund or their portfolio select program. We can make that work with an IRA, even if there's capital calls and the like. That's the kind of specialized service that we're used to and seeing. So it's not just as simple as when you think about an IRA investment buying a security on an open market. We understand that there is definitely some nuance with the private investment world where there might be additional payments or additional schedules of obligations that need to be taken care of on down the future. I've dealt with some private placements from back in 2014 that are still having open capital calls. Kind of found that one a little bit interesting, but I just talked to one of the gentlemen yesterday. They're about to finalize the last round of capital funding for that one. So it's something we're definitely used to. I don't think just because there is an ongoing obligation or something that it might cause too much of a headache for you. It's something that we're certainly used to and we can absolutely accommodate. So to kind of break down the real benefits of using this, past just the ability to invest in alternatives, past just the kind of the broad strokes of what investing with an IRA really will benefit you from. To kind of drill down a little bit more, there's no ordinary income tax. So if you were to invest personally into a deal and it were to have some type of return, and you were just held that in your personal name or a personal type of entity, you might definitely run into ordinary income tax. Or, depending on how that's invested in, there might be capital gains involved in that as well. So, anyone that's, really familiar with the basic sense, ordinary income tax is the one you really want to avoid. They will hammer you with ordinary income tax. Capital gains and then passive certainly is a lot more attractive, getting up into the low 20% of your gains if it's a shorter long-term capital for short-term capital gain is not as egregious as some of the other taxes that are out there. But the nice thing with an IRA is that any type of payment or any type of return that you see is completely exempted from both of those. Even if you have a return on an investment that comes back within a year and a half, no capital gains due at that time. If you have an investment that is paying out quarterly dividends, or it has a conversion event on a convertible note, there isn't any type of basis or tax reporting that you need to do personally, because none of that is included on your personal tax return. And the only time you do need to worry about taxes with an IRA, and this is only with pre-tax accounts, is that you have to just pay a portion of your income tax when you take distributions out of that account. So you continue to amass wealth and continue to amass returns and not have to pay any taxes because you keep deferring it down the road. Now, the big attractiveness of taking advantage of a potentially lower tax rate in a given year is to use strategies like Roth conversions or Roth IRAs to go ahead and prepay your taxes now to not have to pay any taxes in the futures. And especially with the markets and everything, the world in general, as crazy it is right now, you might be experiencing significantly depressed values of your personal assets, or you may be having to take losses personally that might help to mitigate a Roth conversion to where you're not actually having to pay taxes on the movement from traditional to Roth type accounts. We saw this a lot in the last, in the Great Recession in 2008, 9, 10, of people doing Roth conversions of assets in cash because of the lower values and the losses that they were taking. And then the long-term goal, obviously, is that when it came back, they would have paid either low or no tax on that conversion, and then everything in that account from there on forward would be completely exempted from any type of taxation. So there's a lot of cool tax planning strategies that you can get into with that. I teach several different classes on how exactly to mitigate those taxes, how to get into Roth accounts, how to make those work for you. It's really kind of a cool concept, but that's a little farther in the weeds than I want to get today, just with talking about the benefits of IRAs and private investments. Again, these aren't reported on your personal tax return. So the service that we provide in this is that just as with your normal securities that you would hold in a IRA, those don't go on your personal tax return. If you had a 30% gain in your IRA or 401k over a given year, that's all well and good. That just stays there. You never had to report that on your personal tax return. So you don't have to worry about any type of complex tax reporting, especially when it comes to private investments. Everything is taken care of by us here at Advanta. You don't have to include this on your personal returns. It is completely hands-off from you as the actual client. Once the investment's done, we take care of everything else from that point forward. And that kind of goes into our concierge account management. If you do have a question, or you do run into an issue on our side at Advanta, we're a smaller company, although we do have considerable assets under administration. We try to be big and operate small. We have a great dedicated team of account managers, each one of whom we don't actually put into a forward-facing position with our clients until at least 2 years of experience. So the people you're talking to are not going to be so fresh that they don't know what's going on. They have the experience, and most of them have been with us for 4+ years. You have the same person you talk to. You are engaged with that single individual at our company from the time that you open the account until either you close the account or anything else might come up. You always have that same person, which is a really big benefit in a world of automation and technology to where you kind of lose that, especially with someone like Florida Funders. You have that hands-on approach and that personalized service, and that's one of the reasons that we integrate so well, is that we're also extremely committed to the customer experience. We want you to make sure that you understand that we respect your time, you respect your money that you're utilizing our service for by offering you that level of service, and there's no additional fee for that. We strictly just charge a flat record-keeping fee. There is no kind of hidden cost. You don't pay us commissions on anything that you sell or any type of returns. It's just a flat rate fee for the assets that you hold under administration with us. So it's very simple, and it works very well. We have clients that are extremely satisfied with the service. We've been in business since 2014, and we just crossed over our 9,000th client this week. So again, metrics that we're really proud of. We've continued to see growth, every single year, with the exception of, I believe, 2006 and 7 during the onset of the initial slide for the Great Recession. Now, additional sources of capital. Again, we've kind of really covered that, and I did forget. I forgot to take out that last box. That was from a previous slide, so I do apologize for that. But the additional sources of capital is a big one that I always like to make sure people understand. Now we're going to go into a case study, just making sure that we don't have any questions. Okay, so we're going to look at what a case study looks like from start to finish of investing in a deal with an IRA through Florida Funders. Now, it's not going to be terribly complicated because the process really isn't that terribly complicated. So Joe wants to invest in Stylist, and keep in mind, I talked with Saxon before this. This deal did just recently close, but the process will be the same. I just wanted to actually utilize a real company on here instead of just kind of calling it Company X, to show that what this is going to look like from the technical perspective of actually buying something with an IRA. So Joe has 150 in his IRA, and he's interested in the new Stylist offering from Florida Funders. After setting up his online portal with Florida Funders, he can open his Advanta account directly on the portal on Florida Funders on your portfolio page. You can set up your IRA. It's just as easy as clicking through a few things. We'll get you engaged with, typically it's myself who will help you finish up that account application and getting your transfer started. So what does Joe need to finalize this transaction? Past just setting up the account and then engaging for the actual investment. So investing in the deal. First thing we need to do is get the IRA open and get the funds transferred. This is the process that most people are familiar with calling it a rollover. So if you have a 401k or other type of retirement plan, we'll get that rollover started. If it's an IRA, we'll pull those funds over from your current broker. And then we'll get your dedicated account manager signed for all of the investments going forward for that. So at this point, Joe lets his account manager know of the investment that he's looking to do. So let's say in this case, again, it's going to be Stylist. So he's going to call up and say, hey, doing an investment in Stylist. We'll typically have already had the subscription documents from another investment. So we will template those directly to the account. Again, this is going to be in the name of the IRA. So again, it's not in the client's personal name. It is in the IRA's name directly. Joe approves of the subscription documents through our DocuSign portal, along with our general bidirection and waiver. Again, this is all completely paperless, so you don't have to worry about printing and signing stuff. There's very few things, if ever, that you'll need to sign physically with us. We can typically always take care of it through DocuSign. Now, once we actually have the documents in our possession, we'll review everything to make sure it's all in good order. Again, the client, in this case, Joe, would actually need to approve it. So he'll actually initial everything through our DocuSign portal to approve it before we sign it. Because again, the IRA is the one in actually engaging with this transaction, not Joe personally. So we would need to sign on behalf of the IRA as the custodian. And then once we've signed everything, we'll then in turn fund the investment after we have signed and committed to that subscription agreement. And then after the purchase, you'll be able to see that investment clearly indicated on your Florida Funders portfolio page. And you'll also be able to see it on your online portal with Advanta. So you can double check the accounting on both. You'll be able to see the exact amount that went out from Advanta, then being received by Florida Funders. So it's a very easy handshake to check to make sure that the funds have been properly transferred. We always will be able to provide you with a wire confirmation. Florida Funders needs it. We've never had an issue where that's really come up, but we have all of the record keeping services that we provide can definitely help if there ever is an issue, but rarely, if ever, does that arise. And then going forward, we would just act as the record keeper and custodian of that account. We would hold any and all assets. So if Joe, in this case, also wanted to engage in Portfolio Select platform, we could also fund that directly. So we could have the Stylist direct angel investment for the 150 that he initially put in. He could also engage in a Portfolio Select platform as well, and then have Florida Funders kind of direct those investments. He can really do whatever he likes. And even if you are looking to invest and alternative assets that aren't necessarily offered through Florida funders, we can handle those as well. We have typically what we'll see is a client will come through to do some private investing, realize that we also offer the ability for them to buy things like real estate, and they'll also buy some real estate with their IRA as well. That's kind of where we got our initial start in self-direction, was allowing clients to purchase and sell real estate within IRA accounts. And then we branched out, and then over about the past 10 years have put a much stronger focus on the private equity and the private private securities realm to allow clients to invest in these types of assets as well. So it's not just the private equities that we have for our clients. It's also a large array of other types of assets. And if you have any questions about those, I am always happy to schedule a consultation. You can reach out to me directly. All my information is right there on this page. If there are any questions, I will be happy to answer any of those. Again, this stuff is not inherently terribly complicated, especially for most of the people that are coming to us through Florida funders are certainly very, very savvy in looking at the best ways to mitigate taxes and looking for that alternative edge when it comes to their investments. So I'm here for any questions that you do have. I want to be respectful of your time. Looks like we're running right about 34 minutes on this, so I like to keep my engagement with Florida funders to about half an hour, just to make sure that everyone has time to go about their day and not get too busy with like a full hour presentation. But I do plenty of those on our website. If you want to go to advantaira.com, if you're curious to know more about things like Roth conversions or other types of asset classes that we offer for people to invest in, feel free to do so. I catalog all those on my YouTube channel for Advanta IRA. So just YouTube Advanta IRA, you'll be able to see all of my recordings and some of my colleagues as well with regards to other investors that we've worked with, different asset classes and things like that. So
the question in the chat.
Yeah. I don't see it pop up. Was it just
the question is, if 150,000 is moved from existing IRA to you, and I invest 50,000 in Florida funders opportunities, to the remainder of the 150 earn anything while it sits there?
A great question. So it kind of going back to our position of not selling or endorsing any investments. No, that 150 would not essentially earn anything. It wouldn't lose anything. It does sit in FDIC insured accounts, so it is not exposed to any inherent risk that it would be if it was in a non-FDIC insured account from any actions that Advanta may happen to us. It also has full protections of errors and omissions insurance, as well as security bonds for any actions of our employees. But what most people do is they will bring over the amount per deal. You can have multiple IRAs, and I kind of like this question from the aspect of you can have an IRA at TD Ameritrade, you can have one at someone like Pershing and Advanta. You can have them split over multiple different providers to be able to invest in different asset classes. One provider might provide ETFs that you really want to invest in, and then obviously here at Advanta, we offer the service to be able to invest in private investments. So you could just bring over that 50 if you wanted to, leaving the other 100 at another brokerage. And then when another deal came up, you could liquidate the amount of money in positions that you needed at, let's say, TD, and then transfer it over to Advanta for that new investment. So it's not an all or nothing shot. You can certainly leave money where you'd like to and have it working for you in whatever fashion that you see best. Were there any other questions that popped up? I have the question and answer window popped up over here, but I don't see.
I think it was on the chat, actually, Alex.
Okay.
Yeah. I don't see any other questions here. Alex, thank you so much. That was awesome. We're going to get a recording of this, and we're going to put together a blog post as well. We'll get it up on the website. Once again, thank you to everybody. Alex, thanks a bunch. All of Alex's information is on here. And if you also need it, if you lose this and need to connect with him, you can reach out to me, Saxon at Florida Funders, or on our website under the Investor tab. There's information on how to reach Advanta as well.
Yeah, absolutely. And thank you very much, Saxon. We're going to be putting on a few more of these in the coming months going into next year. So make sure you stay tuned. We're really trying to make a good push with educating people on these because of the immense tax savings and the real big benefit that kind of come with this type of partnership. We really try to get that information out there. So again, if you have any questions, on the IRA side, feel free to give me a shout. Florida funders, please reach directly out to Saxon. He's been wonderful to work with. And then, we'll have some more content coming out there for y'all in the near future. But again, thanks, Saxon, for having me on today. I hope everyone is having a great week and finishes the week strong. So thanks, Saxon, and we'll be talking shortly.
Absolutely. Thank you all. Have a great day and speak soon.